everyone, it's Carey bringing you a new video series called Keeping You in the Know, All Things Real Estate. You know that I'm a big believer in the more that we know, the more that we can help. And I'm kicking this series off with my good buddy, Jason Connor. He's a top insurance broker and a professional over at Liberty Mutual and the Helmsman Insurance Agency. And he's been with them over 5 years. And I'm really excited to just talk a lot about the ins and outs and all things insurance today, because I think that's a big part of the real estate, a piece of the real estate process that we go through. So welcome, Jason.
Hey, thanks for having me. Appreciate it.
Yes, well, why don't you tell, so many people here locally know of your name, know of your fun spirit and flair and drive. But for those that don't know you, maybe you can share a little bit about you.
Yeah, absolutely. Thank you. So originally from Los Angeles, California, left home when I was about 19 years old and decided to go active duty in the Army, and thought I would just spend a couple of years, and next thing you know, 9 years later, here I was. Served overseas, had a couple combat deployments post 9/11. My unit was actually the first unit to deploy to Afghanistan when 9/11 happened. We deployed within 18 hours, so that was a pretty interesting ride. But ultimately decided to get out in 2003 and relocated to Nashville. Had no idea what I was going to do, but I was married, had a young boy that I was raising, and had a lot of responsibilities. So I started in the restaurant business at Cracker Barrel during the day, waiting and busting tables, and Logan's at night because it's the same parent company, plus taking 15 to 18 hours in school and married with a toddler.
Wow.
But within 13 years, I was able to work my way up in the restaurant business to ultimately being a general manager, a multi-unit general manager, and a director of food and beverage for a major hotel corporation. But really got to the point where I knew there was something more out there for me. I was missing really more of the human interaction. And my buddy said, "Hey, come sell insurance." And I'm like, "Insurance?" I'm like, "No, I'm not an insurance guy. I don't even know what kind of insurance I have."
Right.
Which is the issue I run into today. And he said, "Listen, I'm just going to have the corporate recruiter call you. I think you'll do really good." And 5 years later, here I am.
Awesome. That is amazing. Well, you know, I've got two brothers, well, a brother and a sister who were both deployed to Iraq as well, and a dad who was Gulf War. So I just want to thank you for your service, because that means a lot to all of us. And you're a big supporter of serving all those who have served as well. And we do the same here at CMG Financial. I love your drive, because I came from the restaurant business too. I think people with our drive, you know, we were waiting 10 tables at a time, you know, and just making it back in the day. So I always love when I'm looking for really amazing employees. Usually their background was somewhere restaurant, you know. I think that is an awesome profession to start out at as well. So insurance, people are like, do I need it? Is it required? Why is it so expensive? So, you know, is there ways to improve the cost, etc.? So if you can share a little bit about, is it required? And, you know, what makes up maybe just your basic homeowners insurance? And I know there's different levels of that that you can go into, but maybe kind of just share the basics for us.
Sure. Absolutely. So first, I mean, insurance is always required if you're going to have a mortgage on the loan, right? The mortgage company wants to protect their asset, or if there's car insurance, if you're financing the vehicle. But on homeowners insurance, it's required unless it's a cash purchase. Even if it was a cash purchase, you're still going to want to have insurance to protect that asset. And people tell me I self-insure doesn't make any sense to me, because why be at risk of paying out a couple $100,000 when you don't have to?
Right.
When you can only, you know, maybe have it. Homeowners insurance for $1,000, $2,000 a year, whatever the case is. But what people need to realize is what makes up homeowners insurance. All the lines in their homeowners insurance. When I talk at mortgage companies or real estate offices, I always start by saying, "Listen, I'm going to ask you to raise your hand if you know all, 6 lines in your homeowners policy." Not one hand goes up.
Right. Mine will not. Mine's not going up either. I don't know.
You know, you have the average home price in Nashville is $300,000. You have a $300,000 investment. You have no idea what you're covered for. More or less, they don't even know who they're insured with.
Sure.
They don't know what their deductible is. They don't know what life is going to look like in the event of a claim. So I take insurance from a different standpoint, where I service my own account, and that takes about half my day away from sales. And and that's fine because that's how I get people to refer to me and to trust me, and they have one phone number to call. We go line by line, and I educate, what is your replacement cost? Why is your replacement cost different than your loan amount, which is the market value of the home, because insurance obviously doesn't insure the land.
Right.
And what you're paying for the home, the appraisal value or the market value has the value of the land. What's covered on your personal property? There's actually a dozen items that aren't covered in your personal property that most people don't know about. Biggest thing is there's a line coverage called it's coverage D. It's called loss of use or additional living expenses. This was really a big point now. It never was before the tornadoes. This is how much money you're going to have if you suffer a total loss or just a claim so significant you cannot live in the home. Before the tornadoes, that really never happened, right? So the company gave you a flat dollar amount versus 100%.
Right.
That's fine. But now we had a major disaster. People are going to be out of their homes for up to 2 years. That's a big thing to understand. Some people just don't understand their deductible. You actually have 2 deductibles on homeowners. Is it a wind and hail claim or is it anything else?
Okay.
Wind and hail claims are a lot higher. And every company is different. So it's important to speak with somebody who can educate you on this, walk you through different companies, provide you some options, and really just lay it all out so you know whatever company that you're going to insure your biggest asset with that you'll ever buy, you know exactly what life is going to look like in the event of the claim and who you're going to call.
I was such a believer in that, doing mortgages and doing them so quickly because that's a need in our marketplace, right? I find that people are so quick to just pick an insurance company, maybe because similar to mortgage, because it's the lowest, what they think, lowest rate, but they don't see the whole picture, right? So even when you're getting a mortgage, I believe in taking the time to truly set yourself up for success, and probably similar in your industry, getting educated in all facets of this business is so important, because you're right. What you're thinking you may get may not be what it is when something truly happens, and you don't know. I bought my house, and 6 months into it, it was raining in my home, literally. I thought rain happened outside the home and in. And so when, I was that frantic, crazy lady calling the insurance agent at 1 o'clock in the morning, like he was going to pick up. And I'm like, why is it raining in my home? What am I supposed to do? What is it going to cost me, right? So I had to I learned my lesson. I was educated on the backside versus the beginning side of what all that, entailed, because I would never expect it to rain in my home, nor did we think that the tornado, we just had a major flood so many years back, tornado, and we had a tornado so many years back too, right? Well, I don't even know how long ago it was. But so would that even happen again? Like, if you were a gambling man, would that be that it would occur again, right? So we all are in that situation that maybe it's not going to happen, and we want to bet on it being smooth sailing. I think we need to always think worst case. What is your opinion on that?
I mean, it's going to happen, right? It's a matter of when it's going to happen.
Right.
And when it happens, are you properly covered, right? We never want to sacrifice coverages to get a lower premium on HOI. That's rule number 1. The only way to get a lower cost of insurance is to raise your deductible. Okay. That's a big conversation in itself. Treat it like a major medical. If you have the cash behind you, there's no point in having $1,000 deductible. Or if you have the cash behind you or know how to do a lot of things yourself, maybe if you're a handyman or your spouse is a handyman or whatever the case is, or you know of a handyman, raise your deductible, lower the cost of the insurance. Huge, but it's definitely going to happen. Is it going to be a flood? Do you have flood insurance? Is it going to be an earthquake in Middle Tennessee? Is it we're going to have a sinkhole like we had in Bowling Green? Or you're going to have a backup from the sewers or drains? A lot of people know that's not covered on insurance. So there's so many things that are not covered, but these buyers, especially first-time home buyers, the young couple getting married, stepping on their own, they're so overwhelmed come 30 days prior to closing. The lender's like, hey, I need your proof of insurance, whatever direction you're going with. They just pick the lowest one because that fits their numbers. They have no idea what they're getting themselves into or if it's correct. And hopefully they never have a claim, but they're going to have a claim at some point in their 30 years. I promise you that.
So you talked about flood and some other types of insurances. So if the lender states that the home is not in a flood zone, and we witnessed this with so many people that were part of the flood that were technically not in flood zones, can I get flood insurance even though I'm not in a flood zone? Can I have that extra protection for the just in case?
Yeah, absolutely. So there's 2 ways to get flood insurance. There's the NFIP, which is the National Flood Insurance Program, regulated by FEMA. There are what was the word I'm looking for? There's I'm drawing a blank.
That's okay.
There's parameters you have to fit in, which is $250,000 or less.
Okay.
It's a 30-day waiting period. So, oh my God, a storm's coming. I better call Jason and get flood insurance. That's not going to happen.
Oh.
And you need an elevation certificate, which is sometimes a nightmare. Most people don't know the process.
Quite costly too. Mm-hmm.
Yeah. So then you have the private market flood insurance, which I have access to as a broker. $2 million versus $250,000, no elevation certificate, and a 7-day waiting period. Unless it's a loan closing, there is no waiting period.
Wow.
So I always tell people, listen, flood's not covered. If you want flood insurance and you're not in a flood plain or flood zone, you're probably looking around $600 a year. It could be less. That all depends on the value of your home.
Okay.
So yes, you can get it. It's super simple. It can be escrowed if your mortgage company allows it, or you just pay it yourself if they don't allow it. But yes, you can get it.
So let's talk about, different deductibles, because like you said, if you're getting quality insurance, you don't want to lessen that quality, right? So you still want the proper insurance coverages, but how can you shift that? So, this past week, Nashville has had an increase in their property taxes. And I'm getting a lot of questions, a lot of emails from my past clients that love living in Nashville, love living where they live, but they're a little concerned about the financial stress that's going to, and the pressure that's going to be put on their monthly mortgage payment, right? And so we talk about refinancing, taking advantage of these low interest rates, but another factor of that is maybe looking and reevaluating your insurance. So, talking about the different deductibles, have you had conversations with people that are re-looking at those insurances and maybe going from one deductible to another? And is there a way to lower that premium amount maybe by adding more policies together? Is there dual discount policies and things like that? Can you share more about how we can possibly lower that portion that maybe we have right now for insurance?
Yeah, absolutely. I talked about it the day that they passed that ridiculous tax increase.
Yeah.
I posted about it and talked about it. I've had a lot of conversations with my clients about it. Again, so you're taking average home price $300,000 in Davidson County. You're looking maybe around $750 a year that your mortgage payment's going to go up. Divide that over 12 months.
Sure.
You get it all set, right? We don't want to sacrifice coverages. We only want to raise your deductible. Most people have $1,000 deductibles. That's pretty standard.
Okay.
It all depends on the company, how high you can go. Some companies, $5,000. Some can go up to $10,000. Some go up to 5 or 10% of what you're being insured for.
Okay.
So if you have a $400,000 house and you go up to 10%, you could get a $40,000 deductible.
Oh.
I do have some clients that do that. That's not standard, but if you have whatever your deductible is, you need to call your insurance agent and say, let's just run some options. I have 1,000. What does 1,500 look like? What does 2,000 look like? What does 25? What is 5,000? Again, if you know somebody that can do the work, or you can do the work yourself, raise the deductible. I can't work a screwdriver, but I got a guy who can. My deductible is $5,000. Okay, unfortunately, I have the cash to pay that, so I treat my homeowners as a major medical. Okay. I'm only going to really file a claim if a tree falls through my house or if my house gets destroyed. But if it's anything less than $5,000 to fix, I'm just going to do it myself. Not only am I going to save money on my mortgage payment, right, and offset that property tax increase, but I'm also going to avoid a claim. And when you have a claim, now your rates are going to go up either 3 to 5 years, depending on whatever company you're with. Okay.
Right.
So definitely have that conversation with who you're insured with and raise the deductible and just play with options. So if it's going up $750 a year, keep raising your deductible until your HOI drops $750 a year, and then you're back in business. Just understanding that you're not going to file a claim for anything less than your deductible. Smart
thinking. I love that. Because again, if you want and still love living in Davidson County and Nashville, working with people that can educate you on trying to find more comfort ways of lowering that monthly payment. So that is a great option there. So insurance is everywhere. I mean, you could sit back and get some popcorn and you can watch every commercial, right? I mean, they are just trying anything and everything to get us to turn heads to go with, one insurance company versus another. And so if you were to share not only you personally about, your personal touch and you really focusing on the client, which I love, Share a little bit about maybe the difference between, the reasons why you work with Liberty and also Helmsman Insurance Agency. Share a little bit about the perks with the company you're with.
Yeah, sure. So I started with Liberty because I didn't know insurance when I first started. And Liberty was a captive, and really technically still is a captive company, meaning they can only offer Liberty Mutual. They provided a lot of training, paid training, so there's a lot of benefits of why I went there. There's a lot of downsides, just like with any job, but Liberty caught on to the fact about 3 years ago that most people use a brokerage. We heard of, was it Xander Insurance and, all these independent agencies that are in town. So they caught on to that. Because they're captive, they couldn't just offer those companies. So they created and founded the Helmsman Insurance Agency, which is a separate brokerage. So we got Liberty, Helmsman, and then underneath Helmsman, we have about 15 different companies that we can quote insurance for as a brokerage. So I love that because I'm captive with the background and the training and the financial stability of Liberty Mutual, but I'm not a one-trick pony where I can offer somebody so many other options when Liberty doesn't have the best fit.
Wonderful.
Because every underwriting is different with every company. If you have a dog, for example, Progressive might have the best rate, but they have very stringent breed restrictions, and they'll cancel your policy if they see anything like a pit bull or Rottweiler. It's stupid, but that's insurance.
Mm-hmm.
Some don't allow swimming pools with slides or diving boards. Some don't allow trampolines. I was on a call yesterday and break down with another agent who's new every company that we offer and their underwriting restrictions. So you need to speak with somebody who can tell you the ins and outs of every company. The last thing we want to do is say, okay, hey, Progressive has the best rate. Here you go. Well, Progressive inspects 100% of the homes that get written. They go out and see a pit bull, be the nicest pit bull, licking the inspector in the face. They're going to cancel the policy.
Ooh.
And now that homeowner is really upset. Their mortgage company gets a cancellation notice. Everybody's freaking out, right? So it all goes back to education, asking the right questions up front, and you only get that with a personal broker, not calling an 800 number.
So, and that's great information, very similar to interest rates. People ask, what's your rate? And there's a lot that goes into what mortgage interest rates are, right? Credit score, right. Down payment, type of loan, etc. When you talk about insurance rates, and yes, there's different companies you can go with that have the different rates, but what are they really looking for? Is it my personal credit score that they're looking at, or is it my history with insurance? What are some of the main factors? Is it anything personal to me?
Mm-hmm. Yeah, absolutely. So just like on mortgages, you go by the credit score. We go by what's called an insurance score.
Okay.
An insurance score has several factors, 0 to 500. 500 is the best. So credit, even though we don't do a credit check, we do a soft check, right? So it's not going to affect the mortgages or anything like that. It's not going to show up on their credit report. But credit, their sex, believe it or not, their age, prior claims they've had in the past, limits of liability. So especially like on auto insurance, if you had somebody who had really low stake minimum coverages just because they didn't know better or they're trying to save money, some companies, that's a red flag. It shows that they're just not insurance educated, and they'll surcharge them for that. Some charge for comp claims, some don't, right? So there's all these factors go into this box, and it produces an insurance score. The higher your insurance score, the better the rates, right? So then we get into deductible options and bundling.
Yes.
There's no sense of having really things separate between companies unless it just makes absolute sense. Again, alarm discounts. A lot of agents don't talk about that, but a lot of people, I guarantee you right now, Carey, a lot of people have alarms in their home.
Yeah.
They're not getting the discount on their HOI.
Ooh.
And it's about 4% of the premium. 4% is not a big number, but if it's a big premium, that 4% is now a big number, right?
Yeah, huge. There's
absolutely always options that go into the rates. And again, if you are working with a captive company who's a one-trick pony, they're like, hey, here's my best and final. Instead of, hey, here's some options. Let's discuss it based on your situation, with dogs and pools and trampolines. Some, insurance company charges to have children in the home. That's a question I ask every carrier is, do you have children under the age of 18? Yeah. Again, it all goes back to education and asking everything on the front end so the insured doesn't get a surprise 30 days after the policy starts and gets a cancellation notice.
Well, that's so important. You said the education word multiple times, and that's what we're all about here today, is working on, educating, our listeners here. The more that you know, the more that you truly can help, and you can feel more comfortable. The last question I would ask you, and I get this often, is I have closed on my insurance policy, right? I have closed on my home with my new purchase of my new real estate. And I maybe want to re-look at my insurance. Am I able to change that after I have finalized that with you? Is there opportunity to make some changes?
Anytime. Yep. Anytime you need to make a change or review it or play with coverages or, look for more discounts. And then really to extend on that conversation, we talk about the renewals, right? You get your renewals once a year. Insurance goes up every year, whether you have a claim or not. You heard it here first. I mean, your homeowners goes up every year. It's paid by your escrow account, right? So your auto insurance goes up every year, whether you have a claim or not. You can't avoid that because insurance companies are paying millions in claims, even though it doesn't affect us. We pay for everybody else. But yes.
So really looking at it once a year is what you're saying, kind of reevaluate that?
Shop your insurance once a year. I do it for my clients. I get a notification when they're up for renewals. If I can't place them better, I'm like, hey, you're still good. If you have a claim, your insurance is going to go up, right, automatically. But to answer the first question, you can change it anytime. You can cancel it. There's no contract. You can change insurance companies mid-policy if there's a better option out there. Or if you don't like your agent, you call me the day after you close on your home and we'll get you started.
Well, thank you, Jason, for being here. And a little fun fact, did you know that Liberty Mutual home base is in my hometown, the little small town that I grew up in? Little fun fact. I feel like that's how we've always been connected. I love it. Well, thank you, Jason, for joining us and help educating and keeping everybody in the know. We'll see you again next time.
Thank you, Carey. I appreciate you.